The war clouds over West Asia are now casting a dark shadow on India's financial markets. Escalating hostilities involving Iran, the United States and Israel have triggered a massive sell-off on Dalal Street. In just a few weeks, nearly 30 lakh crore rupees of investor wealth has been wiped out from the Indian stock market. And the biggest shock came today. In a single trading session alone, investors lost more than 12 lakh crore rupees as panic gripped the market. The benchmark indices took a sharp hit. The BSE Sensex plunged by more than 2,000 points, falling nearly 3% during the session. The Nifty 50 also slipped almost 3%. It was one of the steepest bouts of volatility seen on Dalal Street in more than a year. Market capitalization of companies listed on the Bombay Stock Exchange has shrunk sharply since the latest phase of the conflict has begun. Now, at the heart of the panic is oil. Global crude prices have shot up dramatically after fears that the war could disrupt supply routes through the Strait of Hormuz. Brent crude has surged more than 25% in just a week and briefly crossed $114 per barrel. For India, this is a serious warning sign. The country imports about 85% of its crude oil needs. Any spike in oil prices directly hits inflation, trade balances, and economic stability. Foreign investors are already reacting. Global funds are pulling money out of Indian equities as market turns cautious. Over the past 4 trading sessions alone, foreign portfolio investors have withdrawn more than 21,000 crore rupees. Now, this comes after strong inflows in February, showing how quickly global sentiment can shift when geopolitical tensions rise. Several sectors are already feeling the pressure. Shares of oil marketing companies like Bharat Petroleum, Hindustan Petroleum, and Indian Oil Corporation fell sharply as higher crude prices threatened their margins. Airline stocks also came under heavy selling. Shares of Interglobe Aviation dropped more than 7% as investors worried about rising jet fuel costs. The pain was not limited to large companies. Broader markets saw even deeper losses. The mid-cap and small-cap indices fell more than 3%, showing that risk aversion has spread across the market. But there was one exception. Defense stocks moved in the opposite direction. As geopolitical tensions rise, investors are betting that governments around the world may increase military spending. That expectation pushed several defense companies higher even as the broader market bled. Analysts now warn that the real risk lies ahead. If crude oil prices stay above $100 for a long period, India could face pressure on inflation, the rupee, and government finances. Higher fuel costs could also slow economic growth and strain household budgets.
Unless the crude oil prices go back to $75 and unless the situation in West Asia is diffused and there is some kind of agreement, it is very difficult for the market to go up from here, because we may see in between some kind of technical rebounds, but undertone is bearish. See, the reason is that 70 to 75% our energy needs we import, and high energy prices has direct correlation with the GDP growth of our country. And if GDP growth is not what we have estimated, in that event and in that case, it has impact on the overall corporate India and corporate earnings and corporate top lines. And if they come down because of these inflationary energy prices, then certainly the markets will come down. So it is nothing to do with the current macro, as I've been repeatedly telling, that current macro or the corporate India, but due to geopolitical scenario in West Asia, which is now resulting in high crude oil prices, which can have a huge negative impact on our economy.
Is there any impact that you can see on the FII, FDI inflows?
Well, it's very, I would say, fluid situation. Nobody knows that where the capital flight will go to and what kind of safe harbor they look for capital. So I don't know, but very difficult to predict anything, because yes, one can predict corporate earnings and make prognosis about capital markets, overall indices and earnings, but this is something nobody can predict.
For now, Dalal Street is watching every move in the Middle East. The message from the market is clear. As long as the conflict continues, volatility will remain high, and the fortunes of Indian investors may remain tied to the trajectory of a war unfolding thousands of kilometers away.